Hello traders, in this video we will talk about intraday trading. I'll show you my strategy, how I do intraday trading, and this will not be a back testing video. I will only show those trades which I have actually taken, and I have already also shared them on my Telegram. This video will help you on understanding how intraday trade is actually done and why our basic technical indicators doesn't work. So let's get started. Now I have taken screenshots of my actual trades, which I took in July. I have not been trading much in August and September. So I will share the July trades. What you have to do is understand properly why the trade was taken. And I've made a lot of efforts in this video. So I hope you will like it. So I'll start. Now first trade. This is on 19th July. This trade is in Tata Power. Now as you can see, time entered 9:48, time exited 10 minutes at 10 a.m. So 12-minute trade, and this was the trade. So we'll see, this is Tata Power. We'll go to 19th of July. So this is a trade which I have already prepared so you can understand properly. Now what we will do is, we will see why the trade was taken. Now as you can see that I entered a short position at 9:48. Why I entered short position is because that, as you can see, that this was a resistance breakout. Now some of you will be thinking, why did you even sell here? This is a perfect breakout buy, because as you can see, we had a resistance here, multiple resistance, and then after we got a breakout with huge volume, still I sold it. Why? Because I think while every retail trader is buying, the smart money always sells, and vice versa. So what I did is, I took a short position. Let's scroll back. I'll zoom in a bit. So as soon as it went above the resistance, I took a short position at 948, which is right this green little bar. I entered short at 128, and after some time I covered my position at 127.20. So 80 paise trade, but in intraday, so the number of shares was 5,000 shares. So the margin required was 1,32,750, and profit after brokerage, this I have calculated and watched in my P&L account, I mean in the P&L page of the broker. So margin required was this much. Profit after brokerage, this is after deducting all the brokerage tax and everything, and so the profit on the margin was 2.8% within 12 minutes. On the share it was 0.6%. So I hope you are getting why I shorted, because for the most of the retail traders this was a buy area because it was breaking the resistance. So breakout traders, and also some people sell at resistance, so they started selling at resistance, and as soon as the market started going up, their stop losses started to get taken out. And after that, now this is actual trades and this is not a back testing. So if some other YouTube channels, they'll tell you that, if you shorted here and you bought here, you would have made this much profit. But in actual trading sessions, we don't know what's going to happen. So as you can see, if we look now, then I could have made a lot of money, but at the real trading time, we don't know this. And I covered my position right here within 12 minutes. So let's move on. Now there are two trades on 20th of July. So first we'll look at HDFC Bank trade. Now so this was our previous support, and people who went long have their stop losses just below this. Plus, whenever the market is going below this support, short traders, the breakout traders will be entering. So they will be selling the people who went long, their stop loss will be taken out. So everyone is selling. So what the smart money does, it buys that position. So that's what we do. We buy HDFC Bank at 942, which is just below this. So the market opened gap down, the stock opened minus 2%. And then what happens is that we take a buy position at this candle. Let me go to the 5-minute candle. And I bought at 1439. As you can see, you can just pause it and watch it if you want to see carefully. And then we bought it here, we sold it here. It was not a big profitable trade. As you can see that ROI was only 0.75% and it only moved 0.2%. Now what happened is that I was expecting a bigger rally, but the stock was sideways during the day. So by the time midday, I just exited almost at break even. And the next day, what we saw is the move to the upside, which I was looking here, but we did not get. So no big problem. It was fine. Now the second trade was in Tata Steel. So we'll go to Tata Steel. So the trade was right here. Now the reason for taking this trade is that this area was an important area, which was previous support, previous resistance. Here it was acting as a support. So I was assuming that below this level, there will be a lot of selling pressure from the retail side, stop losses and breakout short sellers and all that. So what I did is I started buying at these lower levels. So I have marked everything on the chart. And if you see, they all correlate. So I have properly marked them on the chart for clear understanding. So I started buying here, I bought on this candle, I bought here and I bought here. And if you see, I usually start with small quantity. So I started with just 100 shares and then increased the shares, because when we are starting, we want to be careful and do not jump in. Now what happens is, let's say the market is going down. So you are taking a counter trend trade. So you don't want to enter a big position. So now if I enter a small position and I get a huge candle, then I'll just exit at market and not buy more. But here what happens is that we keep getting these hammer candles and we do not get any straight move to the downside, which we should avoid. So I kept buying at these levels and I exited at these levels. So the buy average was around 1230.75 and margin required was around 2 lakhs. Profit after brokerage was 5,150. ROI 2.6%. On the trade, it went up 0.56%. Now the position size got big, so I exited just here. And we can say that, in hindsight, we should have sold here. But as you know, in the live market, everything is really different and we don't know what happens. And if you see after that, the stock just continued higher and higher. But we do not know that in live trading. So this was the trade. Now let's go to 23rd July trade. So another trade in Tata Steel and one more trade in ICICI Bank. So Tata Steel trade again. Now here the trade was opposite, because as you can see, this is a resistance zone. And as soon as the stock went above this, I was expecting selling pressure. Also these highs, people have stop losses here and new breakout traders want to buy here. So what I do is I entered, this was actually a 1-minute trade and I entered just 250 shares and I got filled within 1 minute. So not a huge profit on this trade, but I just entered on this candle and exited on this. Margin required was 72,000. Profit after brokerage was 1,000. ROI 1.5%. The stock moved almost exactly 5 rupees. So yes, simple trade. Why? Again, I'm trying to explain why I'm doing these trades, because what mostly retail traders will do is that people who are first, we have to assume there are two types of traders, retail traders. First type of retail trader will be selling here because this is a resistance. As you can see, market sold off here. By market, I mean the stock. It sold off here. So people are expecting to sell here. And we can see some selling pressure also coming in. And as soon as the market starts going down a little bit, what happens is a lot of stop loss orders starts coming in here. Now, what is the stop loss order of a short position? It is a buy order. Now, the second category of traders are breakout traders. So what they see this was a resistance and we get a breakout, big volume. So they also start buying. Now, both the category of retail traders are buying, one through stop losses and one through actual trade. So what does the smart money do? It starts to sell. So what I do is I sell at the open, almost at the open, and I cover right here. This was the trade for Tata Steel. Now the second trade was in ICICI Bank. So let's look at that. So this was the trade. Now this trade was because this resistance and these levels right here. So I was expecting that retail will start buying above these levels and some people will have stop loss there. So I entered some short positions right around this area. As you can see near 1010 and 1019, I entered short positions. So I sold at these levels and I covered right here. So margin required was 1,44,000. Profit was this much. ROI was this much. The move on the stock was 0.4%. Now next day, this is 26th of July. One trade in Reliance. The first trade was just a misclick. So the first trade in Reliance. So let's go look at Reliance. Now, reason for selling here is that I was expecting a lot of stop loss orders right here or maybe buyers. So I started selling here. As you can see now, the thing is, you see, I only sold 100 shares. I only used 48,500 margin, which is less according to my personal size. So I started selling very short positions, just 100 shares, because I was ready to enter more around these levels. But what happened is that we just reversed and I covered my position right here. So as you can see, the stock moved 0.63%. Profit was this much. Profit on the margin which was used was 2.5%. Now I entered only 100 shares. If the stock went till here, I would have added like 200 or 100 shares more. So this is my logic. And after that, you see, if I kept the position, I could have made a lot of money. As you can see, we went down a huge amount. But as you know, that in intraday, we don't know about all that. So this is where I exited. The next trade was in India Bull Housing Finance. Let's go to that. Now, this is similar to the first trade of Tata Power, which we talked about. And here was a resistance, multiple resistance, and some trend line breakouts as well. So what I was expecting, some stop losses and some new buying by the retail. So what I did completely the opposite. I started selling. So I was expecting, so what happens is that I was ready to enter short at these levels, these levels, these levels. The first short entry was my initial entry. Always remember that I enter the first position, the first trade I entered using less position, because we don't know what is going to happen. Let's say I enter my entire capital right here and the stock goes up, then I can't do anything. So let's say if I shorted here and then we got a huge bullish candle, so the best thing would be for me to exit and take a small loss. So what happened is that I entered a small position. The margin required was only 29,600 and I covered my position at 293.55. As you can see, 293.55. 951 I entered, 10.5 I exited, so 15-minute trade. And the profit was this much, 1,125. Profit on margin required is 3.8%. And the stock moved 0.84%. As you can see, the stock remained in a downtrend the entire day and then again kept going down. Let's talk about trades on 27th of July. So first HDFC Bank trade. So this was the first trade which we talked about. Now this is the second trade. Now as you can see, there was a good trend line developing and there were multiple resistance here and here. So as soon as the stock went above this level and this trend line breakout, buying pressure comes from retail. So what I do is I start selling and I sell at these levels, these three levels, and then I buy back at this position. So the margin used was 94,000, profit 1,000, profit on the margin was this much. So 3 sellings and then I covered my position right here. Now the next position, the next trade on Zomato was a huge success and I made a decent amount of money on this trade. Now what happened is that the stock got listed at very huge premium and after that it started moving up again. So I was looking at an opportunity to enter a sell because as the retail trader is thinking about FOMO, that is fear of missing out. So I was feeling confident that more and more retail traders are entering here because the stock got listed at a heavy premium and more retail traders would have started buying. So on 27th, that stock was trading like this, and then after that I saw this trend line breakout on this stock, so I started selling. So I sold at 146.45, so 146.45 at 10.48. So this was this candle, I sold it here. And first I was thinking that I should cover my position right here somewhere around 143. But then I felt confident and I was thinking that I will cover my position right around these areas. So I let the position right and I covered it here, 2,500 shares, and the margin required was 73,000 and I made a huge profit of 19,570 rupees. The ROI was 26.7% and the stock moved 5.3%. So it was a big move which occurred very rapidly after 12 PM. So I got a very good trade on this share. The reason again is that what we have to do is we have to do the opposite of what everyone is doing. Not because they are doing something wrong and people do make money with trend lines and support and resistance, but we have to understand liquidity, where the liquidity lies, because the smart money is always there to take out the liquidity. So this was the trade. Let's go to 28th of July. So this was the trade in India Bull Housing Finance. Let's go to India Bull Housing Finance again. Now I'm going to take you to 1 hour chart. I shared this on Telegram as well. Let me clear all this. Let me hide it for 1 second. Now as we see that there was a resistance here, and as soon as the gave a breakout, we took a selling trade right here, and then what happens is that people who have bought here, they have put their stop loss just below this support area, and what I did is that I started buying where everyone was selling. So let's bring back our chart, and now the first trade was here when we started selling above the resistance, and then the next trade, this was the support. So people have stop loss below their support and new short sellers enter here. So what we do is we start buying, and as you can see that I took my first initial entry was right here, just 100 shares, and then I started adding more and more shares at the lower levels, and these are all the buying levels. So this multiple buyings was done in this candle, then some more buying in this candle, and then further buying here. Now the buying average came at 270.8, and I sold at an average price of 272.2. So in this candle I sold right here, but as you can see the stock continued higher. But as we have talked multiple times that in the live trading we don't know all this, so I just exited my position here. Now again, if you see what happens, the cycle keeps on going. I didn't take any more trades, but as soon as the market developed a new resistance right here and resistance right here, and what happens, as you see, as soon as we went above this level, people start entering and smart money starts selling, and then what happens, we come down. Now again we go below this support, retail starts selling, and what happens is that we rotate higher again. So this keeps on going, and that is where I trade. Now 29th of July, TCS. Let's go to TCS. If you want to watch the trade, I exited it by mistake, so let me bring it back again. So if you want to watch the trade, you can just pause it and watch. So this was the trade, and this was the trend line which most of the retail people would have drawn. And what starts happening is that retail starts buying at these breakout levels. So I was looking to enter short above these levels and these levels. I was looking to enter short. So first position I took at 3220, 250 shares. The margin required was 1,90,000. The reason why I entered a big position in TCS, because it doesn't move much. It's not a fast mover. So I entered a bigger quantity, and then what happens is that I just covered in this candle, this dip right here, which is just below this previous support. So that is what happens. Now some people would have shorted in this candle right here, and their stop loss would have taken out in this wick right there, and the stock continued down, and then it continued further down. And then again I didn't trade this, but what you see is that this is a support level, and as soon as the market goes down, it instantly recovers up, and then this keeps on happening as we have seen multiple times, and then we continue a rally to the higher side. Now trade on 30 July. First trade was in ITC. So we saw that. Now again, what we see, first there was a breakout, retail start buying, more and more buyers come in the market, and then what happens is the stock starts going to the downside. Now mostly everyone who has bought here, maybe even bought here, their stop loss would be just below this previous support. Now I would say that mostly retail traders will put their stop losses right here. What happens? As soon as the market comes in that spot stop loss area, we get a bounce back. We get a bounce back. So I entered buy at the open, almost at the open at 921. I bought at 205.3 and I exited at 206.45, which is just above this resistance. So as you can see, as soon as the stock went above this resistance, there was again downward pressure. So margin required was 20,000. Profit was only 490. ROI was 2.38%. Now this was my initial position. I was ready to enter more at the lower levels, but as you can see, I bought the initial shares and after that the stock went up and hit my target. So it was a small profit. Let's move on to the next trade, which is in Tata Motors. Now here, again, this is a resistance. People selling at resistance and people selling at resistance. People buying at resistance breakout. So people who, as you can see, the people who sold right here and they saw this candle, their stop loss would have immediately come in these levels. This is where they will place their stop loss. And what's the stop loss of a sell trade? It's a buy trade. And the breakout traders will start buying as soon as they get a breakout. So we get a breakout in the morning, and what I do is I start selling at these levels. I sold here, I sold here, I sold here. Sell average was this. Margin required profit and ROI on profit was this much. The stock moved 0.45% for a trade. Next, let's cover this first. Again, Zomato trade. So this is our second trade in Zomato. First one was this big one. Now the second trade was right here. So very easy open trade. Now this is a resistance zone. So I started selling above the resistance, entered right here, covered right here. This is the margin required, profit, ROI. This is the trade. Screenshot from my brokerage. As you can see, entered just 1 minute into the open. I was ready to enter more. I only entered 1500 shares, only 42,000 margin required. I was ready to short at these levels, but I got a profit right here. So needed to further add more. Axis Bank. So a trend line breakout plus the stock moving above these resistance levels. So I started selling at these levels. So no need to explain now every time. As you can see, selling here, bought here. This is the actual trade levels. The stock moved 0.3%. Now, I hope you understand the reason for selling. I have told it many times by now. And then second trade in Reliance, which is this one right here. Now the trade is right here. This is the resistance. So what I do, as you have guessed by now, I started selling. I sold at this breakout, at this candle, I sold exactly here. 2078, covered at 2073. Very small trade because it was almost 1 p.m. So I didn't want to carry this trade. So a quick short trade and made 0.8%. The stock moved 0.25%. This is profit after brokerage. Now one last page which I want to show is again a trade in Zomato and Axis Bank. let's look at the third trade in Zomato. I was trading this stock a lot because it was listed new and it had a lot of liquidity and it was moving very frequently, so good volatility and good trades here. Now again, this was the resistance. So I saw this wick and then I started seeing selling pressure. So I entered short right here at 139.40, 139.40 at 9:31, and then I kept the trade. My target was to exit the trade below these support levels. So I exited my position here. And as you can see, now what happens is that the retail would have started short selling right here, and then what the stock does is it goes up, take out their stop losses, and then continues down again. So it continuously keeps the retail trader on its toes. The trade details is right here. The stock moved 2% for my trade. Profit ROI was 9.8%. Second trade on Axis Bank. It is right here, which is above this level. This was an initial entry. I was ready to sell more at these levels. So as you can see, if I took this trade later on, it would have been a success in the intraday as well, because you can see we had a down move here. If we continue this, we had a down move here as well. So good intraday trade at all these levels. So this was it. I think I shared a lot of trades, and these are actual trades, and I have done them myself. I have also shared them on my Telegram. I hope by now you understand why such moves happen. If we go look at the Nifty for today, what keeps happening is that, there was a consolidation right here. Retail traders enter short below this support. This is where they will short right here. Their stop loss will be at these levels or these levels. What happens? Market turns, takes their stop losses out, comes back. People short at below these levels. Market turns, takes out their stop loss. So this is what keeps happening. So you have to understand the concept of liquidity, where the most number of orders are present. You have to understand that. Now the thing is, there is nothing wrong shorting here. The Nifty could have rallied down. But the point is, if you are selling here, you are already too late. Where you have to sell is right here. Because by this time you have guessed that as soon as this Nifty starts moving above this resistance, what we see is buying pressure from the retail, but selling pressure from the smart money. So we enter here, we take this trade. Now we know that retail traders would have started selling by here. So what we do is we cover our position. I hope you will like this video, and if you find it useful, please do mention in the comments. It took a long time in making this video. I had to find all the data of all the trades and calculate the margin required, the ROI and everything. And I hope you find this video helpful. And these are the shares which I trade most because they are very liquid and they have decent movement, and I don't trade other shares for intraday. This is specifically for intraday, and I personally like to trade in equity, not in FNO, because I am flexible with the quantity in the equity market, not in the FNO market. And for my capital, I think equity is better suited. So this is it for this video. If you have any doubt or any request, you can ask me in the comments. Thank you.